All right, good afternoon. This is almost good evening, eh? Good evening. This is from 5. Good evening, our Kenyan time, East Africa. This is Oracle FX. Oracle FX. This is Oracle FX. Friends, subscribers, viewers, I want us just to take a slight analysis of a given pair. First of all, there is a pair that I gave in the morning which I advised not to trade, but myself I traded. I took the risk. So I took the risk, and this pair was gold. This pair was gold. So as the looking of things, the way gold is looking bullish, very strongly bullish. It has been this way for many months. So right now I want just to check on something that I gave in the morning. I posted something. I predicted this move. Yes, and I said market is bullish, and I said we can only participate when the market will break this level here. But actually the market has played and played and played over this region since morning. So the supply there is not broken. The supply is not broken. So this is the region that we are waiting the market to break out of this region so that we may buy this market, and the signal will be on this side if it breaks on that upper side. So we don't know when it is going to break. Maybe tomorrow, maybe today, maybe at the midnight. We don't know. But that is not our business. Our business is just to make the proper analysis and know and predict the side the market will go. There is no guessing here. Technical analysis will align the market. This market it moves in structures. It forms itself in what we call does not move straight. It moves in patterns. It may use wedge patterns. It may use rectangle patterns. It may use different harmonic patterns to fulfill a distance, a given distance. So every time you have to know that. Every time you have to know that. Now, actually, this is not what I want us to do, because I have my take profit. I can adjust this TP. Let me adjust it maybe to somewhere here. Yes, like that. Done. So I've adjusted my TP from somewhere here to this point where it is. Now, this is a very good thing that we are learning together. You can see gold is rallying down in these 4 hours. You may ask me why I put my eyes on 4 hours. I will say that something about that. But meanwhile, let me adjust the stop loss. The stop loss of this SL stop loss. This stop loss, I want to bring it to break even. Let me bring it somewhere here. You can see this line, this horizontal line. I will put it there. So that's how you protect your money. That is called trailing stop. I'm going to put now a trailing stop. I will advance it from stop loss to a trailing stop. Let me begin again. there, this order, it has a stop loss at 5098.43. That is a stop loss where it is right now. That point, you can see with the crosshair moving there. Okay, I want to remove to adjust that stop loss to a sell. I click down here, a sell, and then it reflects above there, this red fainted line. Then I pull it down to the point where I want to trail my my stop loss. So I will put it here. I will put it here below this hammer. Hammer means the market may reverse down or may go up. Somebody is asking me, where is the hammer now you are talking of? Where is this hammer? Where is this hammer you're talking of? I will show you where that hammer is. So this point 5081.07 is the adjustment of the stop loss. Now it is called trailing stop modified. Okay, modified. So you can see there is now a dotted fainted black line at 5081.07 to be the new stop loss. That one is now trailing stop because already the order is running. It is called trailing stop, meaning that behind it, it is covering, is protecting profits of a running order. The TP, you can see where it is. So this order, I have no query with it. It has no loss on my side, blah blah blah. Somebody is saying, please show us that side of the account. I don't need to show you that one. If you can see this MT4, not MT4, MT5 is running, that's enough. You have yours. Compare with what you are seeing here. Whether I'm lying you or I'm showing or telling you the truth, you can see with your own eyes. All right. Now I had another pair that I wanted us to do analysis together. These are the forex pairs. You can see I have only few pairs because I don't want to mix myself with so many currencies. I just choose 1, 2, 3. I base commonly on the major pairs so that when what I give you is true. We are coming to buy gold later, but not now. Thank you. We will also come to buy GBP/USD very soon. We are also coming to buy maybe Euro/USD very soon. The major pairs with USD as the quote currency. Any point where USD is quoted currency, very soon we are coming to buy. Right now, USD is beating the opponents, but very soon we are going to beat our opponents again of the other side. So I want us to go closely and check this, the Great Britain pound versus Australian dollar. That's GBP/AUD. GBP/AUD. I usually call it GBP/AUD. GBP/AUD. I usually call it GBP/AUD. I usually call it GBP/AUD. Great Britain pound. This one. Pound sterling pound, and the Australian dollar. We trade pairs. Foreign currencies are traded in pairs. Why? There is usually always a war between the two currencies. One currency can beat the other from morning to the evening, but when the night comes, the opponent beats the other, the side B or the side A, until morning. You can see that. So that activity or that reaction is demonstrated by currency, by the movement of candlesticks, up, and down. When it is going down, that tells that one currency is beating the other down, pinning him down. Okay, when you see the currency is going up, when you see the candlestick going up, another one going up, that means the side of the one currency is beating the other, pushing it, or is increasing its strength, beating the other currency, going up, pushing it up, meaning the other one is decreasing and this one is increasing. What does that? Well, let me use the language which is there on the market. We have the base currency and the quote currency. When the base currency is beating the quoted currency, we usually see the market climbing, meaning that the pair in the base currency is beating the pair which is the quoted currency. When we see the market going down, we say it is bearish or it is selling. We say that there is this currency which is on the quoted side that is increasing in strength and beating the other one down, pinning him down, pinning the other one down. And therefore, during that up and down fluctuations, traders make money. So we are going to open the chart GBP AUD. The chart we are going to open here and see what the reaction the market is. It has been choppy and at this point. So let me start doing the analysis. I will start monthly. Actually, currently I just use this phone of mine to record this, and I know very well it's coming to you very clear. This is the monthly chart, how it is looking. It is showing from which year? It is showing me from 2010, 2009 until today, 2026. That's a very huge time frame. It's a very big time frame. So this is what we have. This is what we have. This is what we have. This is what we have in a monthly chart. All right. This is what we have in the monthly chart. So we start by marking the highest point in this market. So the lowest point, which is the supply, the demand zone, and the highest point in the supply region, you know, this is pure market. This is pure market. There is supply and the demand. So the lowest line here, it is forming the demand resistance. It is showing the demand area, which is called support in Forex. And the upper one is showing the supply region, which is called the resistance in Forex. Okay. By looking, the market started from the highest knot and landed down to the lowest knot, which is support region. And from that day, it is struggling again, going back to the level that it started the journey first. So that level is 2.70876. That's the highest level the market had shown us recently. It was there, and that is back, and that is back, and that is back. That is back 2008 November. Let me be specific. My analysis, I usually say, is accurate, should be accurate, because if I failed the technical analysis, if I fail, and then fundamentals will just kick me out because I wasn't right in the technical analysis. So this is 2008 October. It is seen in that crosshair. This is the crosshair. You can see down there. Read the readings. That's November, between November and October. There, between November and October 2008, we have seen what the market did. It was at this highest level, the highest level of 2.70876. Then it fell down. It fell down to it fell down. It went down. The market was bearish over very many years later until 2012, 2013, when it landed until 2013 April 2013 April. That's when the market landed on that strong support and bounced back and went up to this level you are seeing here. 2 point, the level, this is the level the market went, 2 point something, 2 point, the market went the level of 2.23363. Why am I reading these figures for you? I'm reading them so that you may see the accuracy of doing the technical analysis. So since the market landed 2.23363, we may say that market stagnated in that region for a while. Market stagnated in that region for a while. So we can see that is all what we can draw from this. We may put a trend line falling from above, going down. We may put a trend line falling from up, the highest point, touching down, touching either to this or to that. But actually, this is the finished work here, that one. So when you look at it, the market broke that trend line. Oh yes, it broke the trend line. It broke that trend line, but my interest at this level led me not to use this trend line, but let it remain there. Let it be there. We may use it in another time frame. So we're going to the weekly chart. Weekly chart is looking like this. The weekly chart is looking like this. Remember this, the 2.708 were the highest point ever reached by the market. And now we are here. So we said the market, it broke that trend line, is aiming to go up. So the level, the reason we indicated 2.23363 level is that maybe is the next target for the market. So we see the market targeted that region, but it did not clear that region. So what next? Do we have any pattern? We're looking for patterns to draw. Or do we have any pattern here right now? Do we have one? But before we go to patterns, we look, do we have channels? Do we have market channels? Yes. So the market is coming from this side. Let me just remove this trend line. Let it be up there. Just forget about it for now. Now we have a structure here. We read this structure together. The market has been climbing from this level 1.59177, climbing slowly, market climbing until now it shows that it is like it's going down. Okay, now we need to do something here. We are looking for possibilities of getting a forex pattern that we can use to trade. Forex pattern that we can use to trade. Okay, so let's check whether we can get one. We can use the equidistant trend lines to see actually what the market is doing. This is technical, pure naked technical analysis. I want you to see this. 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 Oh, yeah. We have misplaced one of the lowest points. but we are going to correct it here. Okay, let's get back to weekly and see the pattern we are having. Okay, this is the pattern that the market has been forming all along that one. So we may say we can take we can mark this point to be the highest, we can mark this point to be the highest on this side, and we can mark this side to be the highest. This. So the two dotted lines are on the beneath, showing initiating the origin of the market. Now, the market at this point entered into a channel, up, down, up, down, up, down, out. It came out of the channel. Now, the big question is here, since this market is coming out of this, does it have a pattern for us to trade? Does it have a pattern for us to trade? Let's see if we can see one. If we can see a pattern. If we can see a pattern. Yes, the market is approaching something there. The market is approaching a very important level here. Can you see that? Can you see that? Let's go to the daily. You have seen there was a breakout at this point of the channel. We saw there is a breakout to the bearish side. So this is called a what? A bullish. This is a what? A bearish flag. This channel is not a bearish flag. It's bearish what? It's bearish channel. It's a bearish. Market moved in a bullish channel, kind of a bullish channel, until it broke out, looking for another to go another way, the other way. So this is a channel. It was a bullish channel. This is not a bearish flag. This is not a bearish flag, but it's a bullish channel. All right. It's a bearish. I will confirm that and I'll tell you whether it's bearish channel or a bullish. But this was a bullish channel because it is carrying market in a bullish way. But it broke out. So let's go beneath the daily chart and see what is actually happening. So can we see the same? Can we see the same images here again? Yes, we can see them. We can see them. We can see them. Yes, our channel is looking like this. This was a bullish channel. Then the market broke outside this channel. And now it's kind of coming to form a pattern. This pattern, our eyes are here. And the market broke outside this channel. It broke outside going this side. And so we measure the distance of this channel. Very simple, like that. Okay? The distance of that channel is what we expect the market to go outside. Falling down. Can you see that? Falling down to this direction. But very soon, the market is coming to meet a region, this region here. this level is very crucial. This level here, I'm talking about this level. This level is very crucial, this one. I'm telling you, if the market will break this level, then we will interact with the market. We will interact with the market because the signal that is running right now, it was in H4. It was in H4. The signal that is running now, it was in H4. Remember, it is looking like this, and we want to participate when the market will come below this line. When the market will be below 7 point something, that's when we will take the market to TP. This is the TP. We will look to rain with the market down at 7.3664. Please keep this analysis and follow keenly. If the market will not do this, keep the analysis for yourself and see how it is going to do. Right now, the market is playing with something like this in H4. In 4 hours time, there was this structure here. There was this part of the market. That one. Are we together? And the market is trying to clear the distance of that box that I've put it there. It may take years for you to draw those boxes. The distance of this box. The distance of this box. The distance of this box. It may take time. And the distance of that, if this distance of this box will be validated, then the market will break outside the anticipated X point. So we are waiting. I want to be accurate. Let me take it the accurate way. Okay, we want to see it this way. Okay, now we want to break this part. I will mark it with what? With I will mark it with an what? Yes. What can I use here? What tool can I use? Let me use ellipse. To mark the region we want to be broken. Okay. Let me use the ellipses. If the market will break here, I don't know why it is not. Sometimes to do the analysis is not an easy thing. Okay. Sometimes to do the analysis, it has refused. I don't know why it has. Let me use and mark the place. This is the point I'm talking. This is the point with those 9 dots. This is the point I want to be broken. If that point is broken, if this point is broken, let me use another thing to highlight the point. If the market breaks here, breaks out here, if the market breaks that point with a small arrow, we are going to go down this distance. And that's why previously I recorded a video and I said the market has an entry and an exit. I don't count the pips. The market itself will calculate the pips and put the pips in terms of dollars for me. All right. So whenever it is going to break out there, because the trend changed to bearish, we anticipate the market to go down at that distance. And if the market goes down to that distance, it will follow the sequence that is there and the technical analysis which is there. So we can only take this analysis further to 4 hours and see what I'm saying, whether it is true. Whether it is true. You can see we had this small box. This is the box I'm talking about. This box. This is the box I'm talking about. This box is the box I'm talking about. I've dotted the box. I have dotted the box. And I said the distance of that box. The distance of that box. It is what we are going to trade. So when I look at, let me put it closer here, in 4 hours, I see this big arrow. It is what I'm trying to indicate here. So when I push it there to H4, it is going to be seen. So you can see what I'm talking. Let me highlight again. This is the box I'm talking of. This box, the rectangle pattern, it is broken. The rectangle is broke here at 1.99882. And then the market has to go the distance down. And the distance is marked by this trend line. This trend line you are seeing here. This one. So I measured this distance from there. Sorry. I'll have to adjust it. I will get back 4 hours and then so it was here and there. That analysis is like that. And then we're talking about this highlighted region here, this one. The highlighted region, this one. The market, we say it broke down at this point. And then we had to measure the distance of this broken region, this one. And we pulled it down here. And we said, we are waiting the market to pierce below. If it pierces below, we have this trend line here. We will follow the sequence. If it breaks down, it will just go like that. So this is the way it is looking for now. So maybe for those who have analysis which are below 4 hours, like this one, they will get another pattern. They will get a pattern which they use to break down. They may have a what? Let me use another pattern, not that only that pattern in the same day time. There is this pattern. Those who will use the small time frame to enter the market. There is this pattern. There is this pattern here. Oh yes. There is this pattern. So once this pattern is broken, someone will sell the market. Someone will sell the market. Okay. Someone will sell the market. So that's it. But stick to this 4 hours time frame and anticipate to break this first arrow that is showing down, and then the market will go to the next arrow, and then in the daily it will be looking down like this, anticipating to go to this length of the dotted arrow. God bless you so much. That is pound Australian dollar. So enjoy. That is posted on YouTube. This analysis is posted on YouTube for your perusal, for your confirmation. Yeah. Yes. Bye bye for now. Let me remove the red lines because I don't give a signal of 1 hour time frame, and I use a bigger time frame. So let me remove it completely. And say that that's what is needed for you today. That is distance is the market is yet to cover. So kindly, I think you can sell because we expect the market to break below. We can sell. To break at what level? If the market will break 95 to that region, you are seeing 95 to 43, blah blah blah. The market will break there, will still continue to go down. So for now, you can make an entry of 0.01 and sell. So I will make 3 entries. 1 done, 2 done, 3 done. You can do likewise on your side. God bless you. God bless you. God bless you. God bless you. Bye bye. Bye bye for now. Bye bye. Bye bye. Bye bye. Bye bye. Bye bye. You can like my YouTube channel. You can subscribe. You can like the YouTube channel. You can subscribe. You can write a comment. And God will bless you. 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 God will bless you so much. All right. God will bless you. So this is the distance we would want to see the market go. This one here. Okay. That one. Enjoy yourself. Bye bye, bye bye, bye bye, bye bye. For the time being, we have initiated a sale. Maybe we might review that market later, the way we did with the day we did with this chart of gold. The market hit the trailing stop and closed a lot of profit, more than $54 in my account. So it is because I wanted to demonstrate the trailing stop. That's why I initiated it that place. But my signal is not yet covered. It is maybe this level, the length of this arrow. That's where I was expecting the market to fall, and it still is pushing down, looking to aim there. It's only that it is suffering from these hammer candles which are being formed in the lower time frame. Bye bye, bye bye, bye bye for now. I'm ending this audio. And audio.